Hi, and welcome to the Stock Scores Market Minutes for September 12th, 2016. A pretty important week for the market. You'll see why in just a moment, and we'll have a very interesting trade of the week at the end of the presentation. All right, so how do we make money from corrections? So there are many exchange-traded funds and exchange-traded notes that go up when the market is correcting. I could make a list of a dozen or 2 dozen of them. Here's for VXX, which is, of course, the volatility index, SDS, which is an inverse of the S&P 500, QID, an inverse of the NASDAQ 100, and DUST, an inverse of the mining stocks. Use these as short-term trading vehicles to take advantage of market weakness, but they really only work in times of panic, in times when there is a mass exodus of the market. We need to also understand how their values decay over time. These are for short-term trading only. You do not want to hold the VIX through a slowly moving down market, or certainly not through an upward sloping market, because they lose value over time. If you want to understand how that works, do a Google search for time decay of leveraged ETFs, and there'll be lots of information on how that works. So great trading vehicle for the short term. And again, I'll show you my trade of the week at the end of the presentation to highlight that. All right, let's get into the analysis. And there is the big gap down that we saw this morning. September 9th, of course, this is a 30-day, 60-minute chart, and on comments that we may see a rate increase from one of the Fed chairs that, or not Fed chairs, one of the Fed members, US Fed members, some comments that the market took as very bearish, and we broke down out of that lengthy, boring trading range that we've been in all summer, and of course, we just sold off all throughout the day after that big gap down into support. On the longer term chart, it actually doesn't look that bad. This is the weekly chart, and you can see if I draw my upward trend line, we're still holding that upward trend line. In fact, this could actually be a little bit lower. And so at this point, it looks kind of like this, where we're getting maybe 2 or 3 weeks of weakness, and then we'll hopefully bounce back from that. Now, if the upward trend line is violated on a weekly basis, so that doesn't mean that next Tuesday, if it's still below the trend line, we couldn't come back before the end of the week. But if it violates on a weekly basis, then we want to run away scared. But for now, I'm not too worried about it, because we are not really breaking down from a falling top. We are breaking down from new highs. And this is really just a little bit of nervousness from the market after that long period of sideways trading, really complacent trading through the summer. On the Russell 2000, also, you see that big bearish engulfing candle, a weekly down move for the Russell cap or small cap stocks. But then again, look at the upward trend line still intact. So yes, we may be getting a pullback like this, but until we break the upward trend line, which is of course what happened back here, we don't want to get too worried about it. Now, if we do break the upward trend line, like happened back last summer in 2015, well, then it can get a lot uglier. But for now, just look at this as a potential buying opportunity. On the Canadian market, also gap down. We had some falling tops in there. I'd actually made this a bearish chart last week, and we see the follow through from that. We're really at the bottom of a downward sloping channel. I expect lots of volatility in the Canadian market, and you want to be cautious right now. On the longer term chart, just as with the US stocks, the upward trend line has not been broken. We're right at it though, and that makes the chance of it breaking next week a little bit higher. And so I put my rating on the Canadian market as neutral. On the small cap stocks, we're in this little flag pattern here. Haven't really made a strong breakdown. That could happen next week. For now, I think you can be cautiously optimistic with this group, but I want to stress you should be cautious, because look at the gains, 500 to 850. That's a big jump, 70% jump in the last, in just this year. And there's going to be some profit taking as people want to take some of that money off the table, especially if the overall market is weakening. Here was something that kind of telegraphed the weakness that came on Friday. On Thursday, we had a breakdown in the bond market, which means interest rates went up. Why do interest rates go up? Because people are speculating that the Fed is going to raise rates, and that caused us to have that gap down this morning. And it looks to me like we could see further weakness as the market begins to price in a Fed interest rate raise. Is it going to happen in September? Many think no, but it certainly could happen. More likely in December, but you never know. I think you want to be cautious this month, because of course we also have the seasonality of the market tending to sell off in the fall. On the US dollar side, we're still locked in this, I'm going to say, slightly bearish pattern. It's a descending triangle, but we're not really breaking up or down from it, so there's not really a strong message there yet. I think if interest rates do start to go up, we could see a surprise with the US dollar surge higher. So we'll see how this unfolds. It's a kind of inconclusive chart at this point. On the gold market, we tried to make a little break this week and kind of failed. And that means we could come back and test the upward trend line, which it was right at last week. Remember, I talked last week, I lowered my rating to neutral because it was flirting with that upward trend line. Well, it tried to bounce early this week, and then it is failing. If it doesn't hold that upward trend line, I want you to get real cautious with gold and gold stocks. Could be a good trade on that inverse ETF that goes up when gold stocks go down. That is DUST. On the US oil side, we're basically in a little bit of a pennant pattern right here. We've got narrowing volatility as the market builds some consensus on what values are. However, the trend into the pennant is down, which means we could very well see the trend out of the pennant also go down. I want you to be cautious with oil. It's not a negative chart yet, but if it does break down through that floor price, we could see more weakness in oil. And there you see the big culprit this week, fear. Look at the volume in fear on Friday. Look at the price jump in fear. And that is showing you that the market concerned about a correction. And that's going to take me to my trade of the week. But first, let's go over the ratings. US stocks, bullish long-term still, only because that upward trend line hasn't been broken, but bearish short-term. Whoops. And Canadian stocks, neutral, because it is right at that trend line, bearish short-term. Neutral on gold, again, flirting with the trend line, neutral in terms of the pullback that we saw this week. Neutral long-term on oil, bearish short-term. The market started to price in an interest rate increase, and that is bringing some corrective action to stocks. Long-term upward trend lines are still in place. So at this point, this is just a short-term correction, but watch those long-term trends to make sure they hold. Gold is testing its trend. The Canadian market is testing its trend. Oil losing momentum. And of course, fear is rising. And that is the trade of the week. Here is a chart of the VIX from Friday. And we had a nice little gap up. Anytime the market gaps up, I want to give it a little bit of time to build a base. Well, it had a nice flag pattern here and then a break from the flag right there. That was an excellent entry with support, a stop at right around 35, entry about 33.40 or so. And look at the run that it had on a risk-reward basis. It was a huge run, I think almost 10 RR, maybe 8 or 9 RR on that trade. So great trade, making money from the market going down. Not something you do every day, but when the market is correcting, that is a good way to trade. Hope you like this video. If you do, please click on the like button. Please subscribe to the channel. And if you have any comments or questions, don't hesitate to ask. Have a great week in the market and trade well.